The silence is deafening. Once these vast spaces echoed with the sounds of progress, now, only stillness remains, a stark reminder of how quickly fortunes can change in the world of global industry. On the once bustling factory floors in Zhoushan, the assembly lines have ground to a halt. Workers who once assembled the world's most advanced aircraft now face uncertainty as the heartbeat of production has stopped. Boeing, the American aviation giant, has suspended its operations in China, a move that reverberates from Seattle to Beijing, sending shockwaves through the entire aerospace industry and beyond. This isn't just a business decision, it's a seismic shift in global politics. The world's two largest economies are now locked in a standoff that threatens to reshape international alliances and economic strategies. For decades, Boeing symbolized US-China cooperation, with China as its largest market and a vital partner. The company's presence in China was a testament to the power of collaboration, innovation, and mutual benefit. Now that partnership is shattered, a casualty of escalating tensions. Years of trust and shared progress have unraveled almost overnight, leaving both sides to pick up the pieces. The impact is global. American jobs are threatened, supply chains disrupted, and the future of globalization itself is in question. Factories in the US brace for layoffs, while suppliers worldwide scramble to adapt. Are we witnessing the end of an era of cooperation, replaced by fierce competition? The stakes have never been higher, as both nations vie for dominance in technology, trade, and influence. The story of how we reach this point is one of economic interdependence, rivalry, and political maneuvering. Decades of shared growth have given way to suspicion and strategic rivalry, with the world caught in the middle. The suspension of Boeing's operations marks a new, tangible phase of conflict, no longer just about trade deficits, but about shuttered factories and broken partnerships. The consequences are real, visible, and deeply personal for thousands. Tonight, we examine what this means for US industry, American workers, and the future of our interconnected world. The choices made now will shape the global economy for years to come. The world is watching, holding its breath as the next chapter in this unfolding drama is written before our eyes. To grasp today's crisis, we must look back. Boeing's relationship with China began in 1972, after Nixon's historic visit, opening the door to commerce. China's demand for air travel soared, and Boeing became a key supplier, selling thousands of aircraft. This partnership fueled Boeing's growth and helped modernize China's aviation sector. But beneath the surface, tensions simmered. China was both customer and aspiring competitor, demanding technology transfers and launching its own aerospace giant, Comac. Boeing's fortunes were often hostage to political winds, with aircraft orders used as bargaining chips in US-China disputes. The relationship was never simple. Cooperation and rivalry coexisted, with each side wary of the other's ambitions. As China's own aerospace industry matured, the balance shifted. Boeing's deep ties to China became a vulnerability, not just an asset. The stage was set for today's dramatic rupture. The road to Boeing's shutdown was paved with escalating provocations, each one more consequential than the last. What began as simmering tensions soon erupted into a full-blown crisis, with every decision echoing across boardrooms and government halls. On August 1, 2025, the US imposed sweeping sanctions on Chinese tech and aerospace firms, citing national security and the need to protect critical industries. The move sent shockwaves through global markets and signaled a new phase in the ongoing rivalry. Beijing responded swiftly. On August 15th, it ordered a complete halt to all cooperation with Boeing, suspending existing orders and shutting down operations. The message was unmistakable. China would not back down. China's message was clear: if the US targets Chinese champions, China will strike at America's industrial icons, raising the stakes for both sides. Boeing, caught in the crossfire, issued a somber statement and began assessing the fallout. Executives scrambled to reassure investors and employees, but uncertainty loomed large. The stakes are enormous. Over $100 billion in suspended orders, years of production halted, and thousands of jobs suddenly at risk. The ripple effects threaten not just Boeing, but the entire aerospace supply chain. This crisis is the culmination of years of tit-for-tat, tariffs, sanctions, and retaliatory measures on both sides. Each action has fueled mistrust and hardened positions. Each move pushed the two nations further apart, turning what was once economic interdependence into a high-stakes battleground. The era of cooperation has given way to confrontation. By targeting Boeing, China struck at the heart of American aerospace, transforming a symbol of decades-long partnership into a casualty of conflict and competition. The shutdown is not an isolated event. It's the latest escalation in a cycle of rivalry that shows no signs of slowing down. The consequences are immediate and far-reaching, impacting workers, investors, and communities across both countries. The uncertainty is palpable. The world's two largest economies are now locked in a dangerous standoff, with global implications that extend far beyond aerospace. The fallout is just beginning, and the path forward remains uncertain for everyone involved. Boeing's China shutdown is a shockwave through the U.S. economy. Commercial aircraft were America's top export to China, $22 billion in 2024 alone. With those sales frozen, the U.S. trade deficit will widen, and the dollar faces new pressure. The impact ripples through Boeing's vast supplier network. Companies like Spirit AeroSystems and GE now face sudden drops in orders and looming layoffs. Boeing's stock plunged 15% in a day, rattling investors and retirement accounts nationwide. The fear: if Boeing can be targeted, no American company is safe from geopolitical fallout. Meanwhile, Airbus stands to gain, poised to capture the market share Boeing lost. Chinese airlines, still hungry for new planes, will turn to Europe for decades-long deals. This isn't a temporary setback. It could permanently erode America's dominance in global aviation. The stakes are strategic, not just financial. The U.S. industrial landscape is being reshaped in real time. Behind the headlines, American workers bear the brunt. Tens of thousands of skilled jobs in places like Everett and North Charleston are suddenly at risk. These aren't just jobs, they're the backbone of communities, supporting families and local economies. A production slowdown means fewer shifts, canceled overtime, and the specter of layoffs. For every Boeing job, 3 to 4 more exist in the supply chain: machinists, technicians, truck drivers, all now vulnerable. A 25% production cut could put over 100,000 jobs at risk nationwide. Workers who built world-class products now find their livelihoods threatened by politics, not performance. The sense of betrayal is real, deepening divides and fueling frustration. The human cost of this standoff is profound and growing. The Boeing-China fallout is shaking the foundations of the global supply chain. For decades, companies relied on just-in-time efficiency, sourcing parts worldwide with little regard for borders. Now, that model's fragility is exposed. Businesses are shifting from just-in-time to just-in-case, diversifying operations to allies and closer markets, friendshoring and nearshoring. Countries like Mexico and Vietnam stand to benefit, but the transition is costly and slow. In the short term, expect shortages, delays, and higher prices. The seamless global economy is giving way to friction and uncertainty. We may be entering a fragmented world of economic blocs, US and allies on one side, China and partners on the other. Political alignment now rivals economic advantage. The era of smooth, interconnected trade is fracturing before our eyes. Experts warn that we are entering a dangerous new phase of economic statecraft, one that is more unpredictable and fraught with risk than anything we've seen in recent decades. Dr. Evelyn Reed notes, both the US and China are weaponizing economic power, using trade and investment as tools of influence and leverage in their rivalry. The old belief that trade prevents conflict is being tested as never before, with economic ties now becoming potential flashpoints rather than stabilizers. Former Ambassador David Thorne adds, China now sees itself as America's peer, willing to absorb significant pain to assert its status on the world stage, even if it means short-term losses. By targeting Boeing, Beijing sends a clear message: no U.S. industry is off limits, and retaliation can strike at the heart of American business interests. Analyst Richard Abulafia calls this a body blow for Boeing, saying, losing China is devastating, not just for sales but for the company's long-term global strategy. With Boeing sidelined, Airbus will likely dominate the world's biggest aviation market for years to come, reshaping the competitive landscape. Boeing's only hope is to court new markets, but none can match China's scale, growth, or strategic importance in the aviation sector. The broader impact: we are entering a period of slowbalization. Slower global integration, more political risk, and less foreign investment, as companies and countries pull back. The era of pure efficiency is over, replaced by a new focus on security, redundancy, and national priorities. Now managed trade and national resilience take center stage, even if it means higher costs and more complex supply chains for everyone involved. Corporations must factor in political risk like never before, rethinking everything from sourcing to investment decisions. The rules of global business are being rewritten in real time, with new regulations, alliances, and barriers emerging almost daily. The world is entering an era of strategic competition, not just open markets where power and influence matter as much as profit. The turbulence is far from over. In fact, it may just be beginning as nations and companies adapt to this new reality. The future is uncertain, and the stakes are enormous, with decisions made today shaping the global economy for years to come. From Beijing's perspective, this is a calculated move, not a knee-jerk reaction. Chinese leaders see U.S. actions as attempts to contain their rise, sanctions, alliances, and pressure on tech firms. Targeting Boeing hits a crown jewel of American industry, sending a message to Washington's elite: your actions have consequences. The goal is to create internal U.S. pressure for de-escalation, leveraging business losses to influence policy. This is also about self-reliance. China wants to reduce dependence on Western technology and boost its own champion, COMAC. By shutting out Boeing, China accelerates adoption of its domestic jet, even if it's not yet a full replacement. For the world, it's a signal. China will stand up to U.S. pressure, and aligning with America carries risks. Beijing is challenging the old order, declaring the era of one-sided U.S. economic power is over. The global rules are changing. We stand at a crossroads. The Boeing-China rupture is a watershed moment, and the next moves are uncertain. Will the U.S. escalate, risking further retaliation, or seek de-escalation at the risk of appearing weak? This crisis exposes the vulnerabilities of globalization. Prosperity and risk are two sides of the same coin. The future of American industry and global order hangs in the balance. It's a wake-up call. Technological leadership and market dominance can no longer be taken for granted. The U.S. must invest in innovation, manufacturing, and alliances to build resilience. The answers to these challenges will define the next era. The story is still being written, and the stakes could not be higher. The world is watching,